Hey everybody, welcome back to 5 Minute Financial Markets. Well, Santa Powell came early today and he came bearing gifts in the form of dovish language that the market was really hoping to find under the tree, and we ripped higher. Powell gave a speech today at the Brookings Institute in which he had a little bit of hawkish language, a little bit of dovish language, but the big takeaway came in the Q&A where he made it clear that slowing down on the pace of rate hikes is the path forward for the Fed. And his exact quote was, "It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down." That was exactly what the market wanted to hear. Here's all you need to know about the effect Jerome Powell's speech had on the markets. A couple days ago, I did a video about the target rate probabilities for the December 14th Fed rate hike. It was about a 2-to-1 favorite that it would be a 50 basis point hike versus a 75 basis point hike. Just based on Jerome Powell's speech today, that went from 2-to-1 back up to a 4-to-1 favorite. In other words, the market is basically sure now that it's going to be a 50 basis point hike, not a 75 basis point hike, and future hikes after that are going to be lower than expected as well. That sent the market ripping higher. Here's a 1-minute chart on the SPY. Let's see if you can spot when Jerome Powell started speaking. Coming along, chopping, relatively low volume. And then here we hit 10:30 and Jerome Powell takes the mic and boom, the market starts bouncing, jumping, volatility goes crazy, and we take off all the way into the close, finished up over 3% on the day, biggest move in a while on the S&P, and a much needed relief rally in this bear market. Taking a look at the daily chart, we shot way back up into the top half of this channel that I've been talking about. We've been in this channel ever since the bad CPI number in October and have been grinding higher most of the time in the top half of this channel, but the last couple days we closed in the bottom half. We bounced off this midpoint of the bottom half of the channel, call it the 3/4 channel, and today we just ripped all the way back up past the 200-day moving average and right back to this resistance line. And this resistance line, as we've talked about before, has been a brick wall all year long. Every time we've hit this line, we bounced off hard. This was the all-time high in January, crashed. Another high in March, and we bounced off hard. Another high in August, and we bounced off hard. Will it happen again? We'll have to wait and see. But I have been talking about my target of 408 to 410, and that's where I was going to unload all my long positions. Got to be honest with you guys, I pulled the trigger a little early. This big of a move and hitting this resistance, getting past the 200-day, I went ahead and closed out most of my calls. I still have a little bit left over just in case we break through this resistance, but I really do expect to pull back here, and then we could return and break through later. But with all this resistance here, the trend line, the 200-day moving average, and just normal market retracement, I do expect a little bit of a pullback, and I'll be looking to get long again if it looks like we're going to break through. At this point, I don't know. We could reject off like we've done the last few times, or we could wind up breaking through and making a new move higher. We'll have to wait and see on that. But for now, I've closed out most of my length and still holding on to just a little bit of my out-of-the-money calls, just in case. Let's take a look at silver, which had a massive day today. We talked about a couple days ago, it hit the middle of this upward channel and stopped right there. Yesterday it bounced back into the channel, but then rejected back down to the bottom of this big supply zone, this big shaded area. Well, today it launched deep into that shaded area, soaking up all this liquidity here. We'll have to see where it goes from here. I expect there to be a lot of supply in this area, which means a lot of resistance. So it'll probably chop around here. If it does manage to break out of this shaded area though, it's got a lot of room to run up to this $25 an ounce area. Taking a look at the US dollar, the dollar actually started off up today, and then when Powell started speaking, the dollar sold off, and that's why markets ripped higher, that's why silver ripped higher. Although, interestingly, silver was up early in the day, even when the dollar was up. That is a very good sign for silver, because usually those two are strongly inversely correlated. When the dollar is strong, commodities in general are weak, especially silver. So to see silver showing strength, even with the dollar up, is a very good sign. And then with the dollar weakened and silver ripped higher, I really like silver going forward. Taking a look at the VIX, we're back here to this support level where we were a few days ago. As we talked about, we hit the support level, really oversold conditions, and then bounced up to this 22 level that had been previous support. Just kind of chopped around there for a couple days, and then obviously with Powell's comments, headed back down to this support level. I really don't know what to expect from here. The RSI is not as oversold as it was here when I was calling for a bounce. This time I think we could possibly break through the support and head lower, which would be great for the market. At this point, I don't have much of a view on volatility, so we'll just have to wait and see. Don't forget, we still have a big news item coming out on Friday morning before the bell, non-farm payrolls. This is a big market mover and could be the fuel that causes the S&P to break through this previous level of resistance and send it higher, or could be the fuel that sends it back down like it's done all these other times it's hit this resistance level. One last thing I want to take a look at, and back to the 1 minute intraday chart. So you see this giant volume candle here right at 10:30 when Jerome Powell was starting to speak, and this big move up. Every minute before this had been in the 2,000 to 5,000 share range. Here we had a 220,000 share minute while the market screamed higher, which obviously there's going to be volatility when Jerome Powell's speaking, but here's the thing. This candle happened while they were introducing him. He hadn't even gotten up to the microphone or said a word yet, which tells me that maybe there were some big boys on Wall Street who might have gotten an early look at Powell's speech, knew it was going to be a big positive development for the market, and piled in right before everybody else. I have no evidence to support that other than the fact that we have this massive candle before Jerome Powell even spoke, and it moved strongly to the upside. But just one of those interesting market moves. That's all I got for you today. If you enjoyed this video, please hit the like and subscribe button. It really helps us out. Thanks a lot, and see you next time.